Good day, everyone. We are back at it again with another video. Today we'll be breaking down US30. So this is my first breakdown. So we'll see what happens to whether you guys like it or not, so that I come back with more breakdowns. So without any wasting time, let's jump into it. Remember to subscribe, like and share, for other people to get the knowledge that I'm about to provide now. So in my previous videos, I was talking about demand supply. I always talk about demand supply. So if you don't know, demand supply, it's what drives the market. You understand? Also liquidity. You understand? Yeah, not to say demand is not subjective. You understand? It's also objective. You understand? So if you understand, so without wasting any time, let's try to break down Nasdaq. As you can see, your chart that you are seeing is actually not Nasdaq, sorry, US30. I love this pair. I love this pair. So remember, okay, before I start, let me show you what is demand. Demand is simply the quantity of a good or service that consumers are willing and able to buy at a given price in any given time of period. That's the explanation for demand. Then equilibrium. Then equilibrium. Equilibrium, a state in which opposite forces or influences are balanced. You understand? So the same applies. Okay, I have a alert, guys. So, but let's just ignore it for now. But I'll make it this quickly because I've been waiting for this trade actually. So the simplest way to put it, all these things they apply here in the forex market. You understand? Because when they talk about state in which opposite forces are or influences are balanced, here in the market, there's two opposite forces. There's no in between. There's only buyers and suppliers, and forex is mainly about supply and demand. You understand? So let me quickly explain. You understand? So if you can see this chart here, you see that we have a buy to sell, a sell to buy area, which I explained in our previous videos that this whole area here, because it's a sell to buy, becomes our demand. You understand? Becomes our demand. Then if you are looking to sell, this whole area here, do you see? Like the market bought to sell. You understand? This whole area here becomes our supply, where price came actually inside our supply and actually drop. You understand? Even here, if you can check, if you cut this, do you see that price, broke out of this demand? There's also demand here. This is a demand inside. This is a weekly demand. This is a daily demand. You understand? From here to here was the weekly demand. From here to here is a daily demand. So each and every time frame. So you need to be dynamic traders to understand this, so that you can have advantages in the market. You understand? Knowing your direction. This will help you understand direction in the market. What's going on? You understand? So we can say that this was demand. You see that price created an imbalance here. You see that it created supply without even mitigating this demand. You understand? Then it came to this demand and actually gave a reaction. You understand? So the market always comes to demand and supply to mitigate out of a position or to create liquidity. You understand? What drives the market is demand and supply and liquidity. Mostly is liquidity, because once the market is done with liquidity, most of the time it's just done. It just goes. You understand? It can go without even mitigating out of a demand, but it's also subjective. You understand? Yeah. So let's break it down from daily. Understand? So on daily, we can see that we are already where inside our demand zone. We know that this demand zone got tested, but it failed to break this high. You understand? So this becomes a weak low. You understand? This becomes a weak low because it failed. So price can come to liquidate this low and maybe find another demand in a lower time frame to mitigate out of creating going up, you understand? So in a matter of equilibrium, you understand? So we can see, like in this example here, that price came to mitigate out of this supply. Do you see this? Buy to sell, it mitigated out of supply and actually continued down. Then later on, it's coming back to what? To the equilibrium. You understand? It's coming back to the equilibrium, at least the equilibrium of this supply. You understand? Equilibrium, remember what's the meaning of equilibrium in this order? Is the state in which buyers and sellers are balanced. You understand? So this is where buyers and sellers agree, because the market, remember market guys, the market, it moves by demand and supply. You understand? It's just like a normal market. You understand? In the normal market, you know, you can sell any product, you understand? But if you understand market, you understand, let's say during winter season, maybe during winter season, maybe some of the things become expensive because they are short, or they are not, they have too much, they become cheaper because they become expensive because they are in demand. You understand? Because let's say you cannot find a peach in winter, and once you find it, they become expensive because you cannot find a peach in winter. You understand? So the same logic applies here, because the market always does something logical. It doesn't just act out of nowhere. It does something logical. And liquidity, you remember, if you want to buy something, money has to be exchanged. So that's why it creates liquidity. So it needs to balance out the buyers and sellers. So what they will do is that they will create liquidity to take money from other people to give to other people. You understand? So you need to be aware that they will take your money to give to other people. You understand? The ones who know how to utilize their money here, they will give it to them. You don't know how to utilize your money, they will take money from you. You understand? So if you're gonna be ignorant of such things, you understand, they will take money from you and give it to people who understand what's going on here. So you need to understand this. So equilibrium, guys. So we already know that this demand over here has already been tested. So where is the another possible demand that price can come to? We have equilibrium of this price. Understand? Right here, we have equilibrium of this price. Let me mark it right here. We have equilibrium pricing of this price right here. We also have this demand that currently has its own equilibrium price here, right? In these areas right here. So if you can check, I've already said daily demand, weekly demand, but those ones, I've already, what did I do? I've already find, so we have this demand right here. I've already try to break it down on a smaller time frame. I've already tried to break it down on a smaller time frame. So don't confuse it properly. Like don't confuse it. Yeah, it's a pleasure. Don't confuse it. Understand? So we have this demand, equilibrium pricing, and we can see that it's acting as a magnet because price is actually rushing there, which is fine. It's fine, and we have a liquidity pool right here. You understand? We have a liquidity pool right here, and you can imagine how many people are looking to buy this. We can imagine how many people are looking to buy this. Even if we go to maybe to, but we won't see it there. No, I don't want to go deeper because I have a trade that I need to attend to. So let's go to 4 hour. Let's go to 4 hour. So I just want to break it down quickly. Understand? So it's the first time that I'm actually breaking down something. So everything that I'm doing here, I'm speaking it out of my subconscious mind. I didn't prepare anything. So on 4 hour, okay, do you see that on 4 hour, in that equilibrium price action, we actually have this demand here that was not mitigated also. We have this demand. So let me start from below here. Let me start from below here. We had supply here. Remember, price was trending down here. We had supply here. Price came to that supply. That supply didn't hold, actually break out of it. So then we break it down from here. You understand? We have a demand here. Price already came out of that demand and come back inside to mitigate out of this demand. It even went below the equilibrium pricing. So it went to be cheap. So if you bought here, you bought cheap. That's why you see this move. It's not a mistake because okay, and it created liquidity here. If you understand wake off, it created wake off. And after taking out, so wake off means, let me just quickly, wake off. When you see wake off or something, it means it's just the market is accumulating. It's accumulating or distributing liquidity. You understand? So what they do, they try to trap buyers. People who don't know how to utilize the money in the market. So they'll trap buyers and trap sellers and take their money and give it to people who are loyal. So institutions, they understand this. Market makers, they are the ones who do this because they want to take your money and place their orders here below your money. They know what your stop losses after this break of structure. They know that your orders are below here. Then come, if you understand wake out, it's automatic rally, then it comes spring. This is spring. Then me, the way I trade after spring, I enter here. You understand? Because I don't want to get involved here. It's confusing. If you try to get in here, what if it just continues going down? I need to see it start moving up to actually see it. Okay, now it's starting to move up. I can actually buy. So as you can see, price went above and come back to this demand and mitigated out. Then price shot up from here and never came to mitigate out. So we have an imbalanced price action here. We have an imbalanced price action here. And on top of that, it broke out of this demand also and never cut. So we have two demand here, two demand levels here that we can look at actually, that we can look at. Two demand levels that we can look at here that we can look at. So what do we expect price to do when it comes in? Do you see? And after shooting up, do you see that price was creating a balanced price action because mitigating out, coming back, mitigating out, coming back, mitigating out, coming back to mitigate, mitigating out, coming back to mitigating up. Do you see, Woody, if you look at price like this, you see, and every time they mitigate out, you see, there's wake off here, there's wake off on a smaller time frame here, there's wake off here. So us here now, we are here now, we are here now, we are here, and it's coming back, it's coming to our demand. It's coming to our demand, and we can already see that it's trying to create some sort of a wake off structure here. Meaning that they want to manipulate before they can go up. So we have this demand here, daily demand. We also have this demand here. We have this demand here. We have this demand here. This is our point of interest. So if they start, sorry, I have a little bit of flu. So if they start like doing whatever here, then I see spring. Spring, you'll see price rushing there, meaning that they are taking liquidity. Then I see a break of structure. Then I'll start to buy this thing going up. You understand? Because I know what they have done, they are knowing, and so I'll look at maybe 1 hour price delivery where I just mark out the demand. Once it comes back to demand, I wait for same thing, then going up. You understand, on a smaller time frame, because I've already know with okay, they are done with their job here. All they have to do now is to go up. You understand? To go up, maybe to go above this high. You understand? So, but now let's see the possibilities of how can they get here? Because what if they take their time to get here? What if they just do this first, then do this? You understand? So we also have this supply here. We also have this supply here that if in case they come up here and give us what distribution, we can sell this thing to inside those demand areas. You understand? From this supply, we can sell it inside those demand areas. You understand? And to also prove again that this demand and supply, do you see here? that price came to be sufficient here, came to balance here. You understand? Inside this demand, because inside this supply, because this was a buy to sell. This whole area here was demand, was supply. So price, after going below this, after going below this demand, because when it was here, this entire thing was demand. Understand? This entire thing was demand. And before they go up, you see that they created some sort of accumulation, of which is wake off. Understand? You need to study accumulation. You can find videos, but I wouldn't suggest you to go find videos. Find a mentor who can teach you how to identify like this accumulation, because you'll find, but you'll find like things that on YouTube, maybe. Yeah, maybe you'll find, but I suggest you find a mentor, because a mentor can explain it the way he understands it. You understand? But on YouTube, you don't have to. You cannot ask questions, because maybe someone posted 2 years ago. So you see, and also before they sold here, because remember we also sold here. They also created some sort of what of distribution before selling here. So now we have this supply, and we have the closest demand that we can buy from is this one. So if price taps in here first, we can look for buys. But if price decides to go up first, once it taps in here, we will definitely look for sellers. You understand? We can also maybe it will go all the way inside, or we don't know. We don't know, because all we have to do is just to wait until price gets inside our demand, and wait for distribution to happen. That's all we can do for now. You understand? Unless maybe it comes all the way to extreme. You understand? This is extreme. So here we can enter directly, because we'll simply put our stop loss above the strong high. You understand? We'll simply put our stop loss above the strong high. You understand? So now we're just waiting. Understand? This becomes our demand, our supply zone. Understand? So for us, this week we can expect price to actually come inside this, then distribute, then maybe go even a little bit deeper. You understand? Maybe go a little bit deeper. But once it gets here, it gives us, we will target this. We're not going to target this, we will target this. Then from there, we'll decide what's going to happen. You understand? Then we'll decide what's going to happen. So for now, I think the best way is to wait. The best way is to wait on US30. This is US30. Today is the 13th of March 2023. So let's just wait and see what's going to happen. Understand? There's nothing that we can do at this point. Yeah, because I can see that it's ready to buy. Why do I say it's ready to buy? But you know, this is called transactional liquidity. So this is liquidity for a pullback. Understand? These are liquidity for pullback. So what happened here? Do you see that we had a previous week's low here? This was previous week's low. So what market did, it took that liquidity out, and now it's pulling back. You understand? It's pulling back. You understand? So yeah, I don't trade that, because you know, this is a downtrend, so I don't want to counter a trend. You understand? Most of the time it works. You can make money out of it. Yeah, but you know, yeah, countering a trend. So that's why they say trend is your friend. So I'd rather trade with my trend. So I'd rather count it from right here, because I know on a higher time frame, we are actually on a demand level going up. You understand? So I can counter this on a higher time frame. You understand? And this is 4 hour. So I can counter it with daily demand. So that way makes sense, right? It makes sense. Like the sell that we got from here, you see, this was 4 hour structure. You see, 4 hour structure, 4 hour structure. Then it tapped into what? Into weekly supply. You understand? And it tapped into weekly supply. So I can counter a 4 hour. I can counter a 4 hour structure with weekly demand, with weekly supply. You understand? So that's why. So here it hasn't really tapped into my daily, so I cannot counter a 4 hour without even feeling disorder, you understand, without even mitigating out, you understand. So I need to see the mitigation happen, and one way to see the mitigation happen is when price taps into this and gives me a wake off, yeah, accumulation. Let's just call it accumulation, because yeah, we don't want to confuse ourselves, and see accumulation, then we can buy this thing. So let's see the meaning of accumulation actually. Let's see the meaning of accumulation. What does that mean actually? So like, since this load shedding and stuff, the network becomes slow. So let's just end this thing, because I can see now the network is freezing. Okay, it's coming back online. Which I have a trade that I need to attend to. So guys, I'll also leave a link for my IB. So what you can do is register an account with that link. IB for XNES. This is not a paid promo. It's because I trade with them, you understand? So I'm doing affiliate marketing for them. So to grow my business, you understand? So you can use the link to open an account. Then once you open an account, I'll leave also my Discord username. Once you open an account, you send me a text, said, hey man, I've opened an account and I deposited money. Then I can give you a more deeper, you understand, liquidity. Maybe I can also share the way I view accumulation and distribution, you understand. I'll have a class, you understand, for people who register the account using my link, because I can, in my back office, I can see, okay, which account has opened an account, which one is deposited and stuff. So use the link that I'm gonna provide, then come back to me and say, hey man, I've opened an account. You said this on a YouTube video, so please live up to your promises. Then I'll live up to my promises. I don't make empty promises though, yeah? I don't make empty promises. So once you do that, come back to me. So let's see, accumulation. I don't know if I'm spelling this right. Accumulation meaning, accumulation meaning, accumulation. Do you see how interesting this? The accusation, I don't know even. The acquisition, you know, let's leave this English, gradual gathering of something, you understand? So accumulation meaning that they are like accumulating orders for them to liquidate, you understand? So like here, this is an example, accumulation of wealth. This is something different. So a mass or quantity of something that has gradually gathered or been acquired. So it makes sense with why they're accumulating orders in order for them to liquidate, because they need, you know, in order for a transaction to happen, money needs to exchange. So what they do, they take money from people who don't know how to utilize their money in Rwanda. And with the information that we've been given, we don't know how to use our money, obviously, because all we do is just to wait for a detach in a trend line without any logic, you understand? Without any, I'm not saying like trend lines, they don't work, you know, I don't want to be attacked, but I'm saying that we were using like a simple logic, because we've been schooled, like we say, if we follow this and this, you'll make money, you understand? Without any logic, then they take money from those people, because you are using money, you are utilizing your money in the market that without any logic, you know, they touch, then you buy. That's why most of the people are failing, you know, and they say it's psychology. No, it's not psychology. It's because we don't know how to utilize our money in this market, you understand? We know how to utilize our money when you go to the shop in those markets. I need a tomato, so I can go and buy them. But in this market, we don't know how to utilize our money, you understand? So viewing supply and demand this way can really improve you know, the way you trade, or yeah, it can improve how you utilize your money here, because you'll know that, okay, on a demand level, I need to buy, and this is what I have to look for, you understand? So this is it for is my first time actually doing a breakdown, so I don't know how I did. So if you comment, you know, give me some pointers, guys. Say, hey man, if you can improve maybe in your language or maybe the way you deliver, because me, I like to speak things out of my subconscious mind, because I go learn a thing, then when I explain it, is the more I understand it better, you understand, from my subconscious mind, you understand. So that's how I do most of my videos. So, and most of the videos that I'm gonna do them from my subconscious. You understand? So that's it for today. If you like what I've explained now, just take a like. You know, like and share maybe with your friends. Maybe there's people who are struggling with forex. You understand? And if you want to know more, you can. I'll leave a link in the description for my IB. I'm IBing for Xness. So you can go out, like you can go and check them out. You understand their licensing regulation, because you need to do that. You understand? Every broker that you attend needs to have a proper licensing, you know, because you don't want to invest in your career with a broker that might close next week. You understand? So you go to check their website, Xness, what. If you love them, you can come back and click the link. Then once you make a deposit and tell me, say, you said, you tell me, you said, say, in that video, you can even take this link of this video, said, if I open an account using your link and I deposit money, you will share certain information with me, then I'll share it. I always live up to my promises. And if you like the video, like, subscribe. What do they say again, these guys? I always watch the video because I love content creation. Like, subscribe, and share. Yeah, for the algorithm. Okay, thank you guys.